Welcome back, it's Hima here, and I've got Chart of the Week 10-year Treasury Yield Update. Today's Wednesday, February 24th, 2021. Before we take a look at the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. Now, you might be wondering, what is the 10-year Treasury yield? Because here at the Hima Reddy Tribe, I'll be honest, until now I haven't talked about it too much. That's because it's been at historically low levels, but it's on the move again. So, first I want to make sure you know what it is. The word yield, in this situation with the word treasury, represents the interest paid by the US government to T-note holders. So a T-note, treasury note, is 10 years in length. A bond is 30 years in length. The 10-year treasury bill yield is an indicator of overall investor confidence. And this is in large part because of the safety, quote unquote, of government backing. When you have a T-note or a T-bond in your possession, that means you have lent that money to the US government and they are backing it with the full force of the federal government to pay you back as planned and pay you the interest, which is why you're investing in the first place, right? For the interest, for the investment income. The other thing is that 10 years, specifically the 10-year yield, ties into a lot of other important financial numbers out there. Something you may relate to is mortgage rates. If you rent, then your rent that you pay each month is helping your landlord pay their mortgage. If you own a home, then you are very familiar with mortgage costs and rates and how they really make a difference to the lifetime of your mortgage. If you decide to switch it up, refinance, change homes, buy more homes, all of that business. So just with the effect on mortgage rate alone, watching the 10-year yield is a big deal. So this is just a few bits to introduce you to the 10-year treasury yield or remind you of its importance. Now let's go look at the charts. Now for my members of the Hima Reddy Tribe, I'm going to do a deep dive here. I'm going to go really deep and do the full multi-time frame analysis. For everyone else in the tribe, you're going to see me back here with the daily chart of the 10-year treasury yield and where we see it heading next. All right, so we're on the daily chart of $TNX.X. That is the 10-year treasury note interest rate or yield as per TradeStation. I've just completed analysis of the monthly, weekly, daily, and 60-minute time frames in my members' deep dive, and I want to share an update on where 10-year yields are for the whole tribe. So look at the latest yield action. Okay, yields had come back to this old important low from September 3rd of 2019 and are now just backing off. This is with RSI still being up out of the bull support power zone. So is today's action a continuation of the upside we've seen in yields, or are we going to have a pause for some time? Well, let's first zoom in on the daily chart and look at what supports are on yields. There's a significant low here from February 18th. So if there is any further weakness that pulls us back, it'll probably hold to February 18th. And I want to take a closer look on an intraday chart to show you what that looks like. So here's my intraday chart. Again, I analyzed and drilled down to this in the members deep dive. And here are two forecasts. Now this technically should be orange because it's a forecast that has passed. So in my forecasting color coding that I use, which my recent founding members of the Skinny Outlook Annual know well, when I use orange, it means it was a past forecast. When I use purple, it's a future forecast. So you can see that the intersection of these two orange lines was the exact forecast for yield and time to meet there. And you can see how close we got. And this forecast could have been made as early as back here on February 12th. So that was pretty useful to guide the move higher. Now there's a new forecast that's still not yet met, and that forecast could have been made as early as last Friday, suggesting that the yield is on its way up, continuing into Thursday afternoon to about 1.48%. So what we do is we take this axis and divide by 10 to get the percentage. So this is falling again, approximately 1.48 if we just want to round it out. So 1.48% Treasury yield by Thursday afternoon. This is a very specific forecast because when you do forecasts on smaller time frames, you can get that specific, down to the hour, even down to the minute. And the cool thing is, in the loss forecasting trading system, I teach how to manage your trades and your market strategy around a forecast, even if the forecast goes sideways, doesn't pan out. All right, so the outlook for the 10-year yield right now is continued upside potential into this forecasted purple cross. If there is weakness, then I do think that the next intraday support is right here at 1.34%, so 13.42 on the chart. And if yields get below that, then you can see all the potential supports to monitor along the way. Catch you next time. You can sign up at the link to get my hot, timely, actionable updates as soon as I publish right to your inbox.